47 motorcycle dealerships permanently closed in the last 30 days alone. That's more than one dealership shutting down every single day. But here's the crazy part. This crisis creates the biggest buying opportunity in 20 years, and I'll show you exactly how to capitalize on it in the next 15 minutes. While everyone's debating whether Harley can survive today's market, what if I told you the entire industry is facing a once-in-a-generation correction that will permanently change how motorcycles are sold in America? Drop your city in the comments right now. Let's see which areas are getting hit hardest by these closures. In this video, I'm breaking down the 5 catastrophic forces creating the perfect storm for 2026. Forces that are already destroying the traditional dealership model and threatening major manufacturers with extinction. And I'll reveal exactly how you can use this market crash to your advantage. The dealership collapse. The motorcycle industry is facing a reckoning unlike anything we've seen before, and it's happening right under our noses. 47 motorcycle dealerships permanently closed in the last 30 days alone. But the mainstream media isn't covering this because it doesn't fit their economic narrative. They're too busy telling you about the latest electric vehicle startup or how the economy is supposedly booming. If your local dealership is still open, drop the name and city below. Let's document which ones are surviving. Let me show you what's really happening on the ground with the actual numbers, because these numbers tell a story that should terrify anyone in the motorcycle business. Here's what makes this situation truly unprecedented. A typical motorcycle dealership needs to sell 350 to 400 units per year just to break even. That's not to make a profit. That's just to keep the doors open and the lights on. But average dealership sales in 2025 have dropped to just 187 units per year. Think about that for a second. That's less than half of what they need to survive. This isn't just a temporary downturn. This isn't just a bad season or a rough patch that'll correct itself next quarter. This is a structural collapse of the traditional motorcycle retail model. The system that's been in place for decades is crumbling before our eyes, and most people don't even realize it's happening. But it gets worse, and this is where you start to see the real strategy behind what's happening. Starting October 2025, manufacturers are demanding between $2 million and $5 million in facility upgrades for dealers to keep their franchises. Let me break down what Harley-Davidson is requiring, because it's absolutely insane for a dealer that's already struggling. Harley's requirements include a 15,000 square foot showroom, not 10,000, not 12,000, exactly 15,000 square feet. They're demanding 12 service bays, which means completely rebuilding most service departments. They want $500,000 in parts inventory sitting on the shelves at all times. They're requiring full digital integration with their corporate systems. And here's the kicker. They're demanding electric charging stations, even though electric motorcycles represent less than 1% of their sales. For dealers already drowning in unsold bikes and paying tens of thousands of dollars per month in floor plan interest, finding another $3 million is impossible. It's not difficult, it's not challenging, it's literally impossible. Most will either sell out to big dealer groups or close entirely. There's simply no other option. The days of the family-owned motorcycle dealership are coming to an end. And here's the part that should make your blood boil, because this is where you see the real game being played. Out of 15 shutdown dealerships that were researched, 8 were bought by manufacturers themselves at 40% below market value. Let me say that again. 40% below market value. This isn't coincidence. This is strategy. The manufacturers are deliberately creating this crisis with impossible requirements, then buying the best real estate dirt cheap when dealers can't meet those requirements. It's a calculated move to eliminate the middleman and take direct control of retail operations. They're using economic pressure to force out independent dealers who've spent decades building their businesses, who know their customers by name, who've been part of their communities for generations. Question for you: do you think manufacturers are intentionally forcing out independent dealers? Drop yes or no in the comments, because I want to know what you think about this. Industry forecasts predict another 180 dealerships will close by December 2025, setting up an even worse situation heading into 2026. By this time next year, your local motorcycle dealer might be gone, replaced by a corporate-owned brand center with standardized pricing and no room for negotiation. No more relationship with the owner, no more local knowledge, no more deals worked out over a handshake. By 2027, major manufacturers want to reduce U.S. dealership count by 60%. Let me put that in real numbers, going from 3,891 dealerships to just 1,556. That's not a projection. That's not a worst-case scenario. That's the stated goal from internal industry projections. This represents a complete collapse of the traditional motorcycle retail model, with $18 billion in dealership assets at risk and 47,000 jobs about to disappear. We're talking about entire communities built around these businesses suddenly facing economic devastation. The mechanic who's worked there for 20 years, the sales guy who helped you buy your first bike, the parts manager who always knew exactly what you needed, all of them facing unemployment. If you work at a dealership or know someone who does, share this video with them. They need to see what's coming. The ripple effects will be enormous. Parts suppliers who've built their businesses around serving these dealers will lose their customers. Aftermarket manufacturers will lose their distribution channels. Riding schools that operated out of dealerships will have nowhere to go. Local repair shops will face increased competition from corporate service centers. The entire ecosystem of motorcycle culture is under threat. But the dealership collapse is just the first domino to fall. What's happening with the manufacturers themselves is even more shocking. The manufacturer meltdown. While dealerships are closing at record rates, the manufacturers themselves are facing an existential crisis. The brands you've known and trusted for decades, the names that have been synonymous with motorcycling for generations, are fighting for survival. And some of them won't make it. Let's start with KTM, because what's happening there is absolutely shocking. If you own a KTM, Husqvarna, or GasGas, you might want to pay close attention to this next part. KTM owners, drop a comment if you're worried about parts availability and warranty support after what I'm about to reveal. KTM, Husqvarna, and GasGas face potential extinction with their parent company Pyra Mobility, drowning in $2.8 billion of debt. That's not a typo. $2.8 billion. To put that in perspective, that's more than the GDP of some small countries. KTM needed to secure $840 million by May 23, 2025 to avoid complete collapse. That's from their own financial filings, not speculation or rumor. This is public information that they had to disclose to investors. At least 500 KTM employees faced job loss before the end of 2025. But the human cost goes deeper than just numbers. Production completely stopped in January and February 2025. The Mattaghofen factory in Austria, which normally runs around the clock producing some of the most advanced off-road and street bikes in the world, sat silent for 8 weeks straight. Workers were sent home. Supply chains were disrupted. Dealers received no new inventory. Over 120 KTM dealerships in North America alone closed in the last 18 months. That's not worldwide. That's just North America. KTM's debt-to-equity ratio reached 77.3%, a dangerously high level that financial analysts describe as critical for a manufacturing business. When you're that leveraged, any disruption in cash flow can be catastrophic. KTM filed for restructuring under self-administration, which is Austrian bankruptcy protection, on November 29, 2024. Headcount was cut from 6,100 to 4,300 employees. That's nearly 2,000 jobs eliminated in a matter of months. These aren't just statistics. These are engineers, technicians, assembly workers, people who've dedicated their careers to building motorcycles. KTM had 100,000 unsold motorcycles, or around 1 year's production as of late 2024. Imagine that, an entire year's worth of production just sitting in warehouses. By mid-2025, KTM reduced inventory at dealerships by approximately 40,000 units, but that still leaves 60,000 bikes gathering dust in warehouses around the world. Every one of those bikes represents money tied up, money that's not generating revenue, money that's costing them in storage and depreciation. Bajaj Auto committed 600 million euros in May 2025 to keep KTM alive and negotiated a call option to buy Pyra's controlling stake, potentially taking over KTM completely by 2026. This would effectively make KTM an Indian company, with all the implications that carries for future design, manufacturing, and parts availability. The Austrian heritage, the racing DNA, the engineering philosophy, all of that could change under new ownership. But here's where it gets interesting. CF Moto from China offered up to 700 million euros to buy KTM, but wanted control immediately. That's 100 million euros more than Bajaj offered. A Chinese-owned KTM could become reality if the Bajaj deal falls through. Think about what that means for the brand, for the racing programs, for the entire identity of what KTM represents. KTM owners, are you considering selling before resale values drop further? Let me know in the comments because I'm tracking how this is affecting the used market. But KTM isn't the only manufacturer in trouble. Let's talk about Indian Motorcycle because what's happening there is equally shocking and maybe even more unexpected. Polaris Inc. announced it is selling a majority stake in Indian Motorcycle to Carolwood LP, a Los Angeles-based private equity firm. The deal is expected to close in the first quarter of 2026. After spending billions to revive the Indian brand, after building new factories, after developing new models, after investing in racing programs, Polaris is walking away. Indian Motorcycle accounted for $478 million. Only 7% of Polaris's total revenue for the trailing 12-month period ended June 30th, 2025. Despite all that investment, despite all that effort, Indian never became the profit center Polaris hoped it would be. The sale effectively ends Polaris's 28-year involvement in the motorcycling industry. Polaris CEO Mike Speetzen stated the sale would further strengthen our focus on areas of our portfolio that offer the strongest growth potential. Let me translate that corporate speak for you. They're cutting their losses and getting out while they still can. That's corporate speak for cutting losses. Reading between the lines, you can sense the relief from Polaris bean counters. If Indian was making any money, it wasn't making enough. And attempting to fix the problem would have hurt Polaris's bottom line even more. Approximately 900 Indian Motorcycle employees will be affected by this transition. The Spirit Lake, Iowa factory that produces Indian motorcycles faces an uncertain future. The engineering teams in Minnesota, the marketing department in California, the racing program, all of it is up in the air. Indian owners. Drop a comment if you're concerned about warranty support and parts availability after this sale because you should be. Carolwood LP has no prior experience in the vehicle industry, motorcycles, cars, or anything with wheels. The unexpected nature of the sale has most observers confused and concerned for this 124-year-old brand. Carolwood specializes in what they call distressed assets and operational restructuring, which is rarely good news for employees or customers. Recent history leans toward private equity firms carving up and selling off motorcycle brands. However, Carolwood has a history of holding onto assets and has reportedly not sold any of its acquired assets to date. Whether this means they'll invest in Indian's future or simply milk it for cash flow remains to be seen. But history suggests we should be skeptical. Even Harley-Davidson, the industry giant, the company that's been synonymous with American motorcycling for over a century, is showing serious signs of trouble. The motor company has weathered many storms in its 120-year history, but the current challenges may be the most severe yet. Harley-Davidson withdrew its full-year 2025 financial outlook, citing uncertain global tariff situation and macroeconomic conditions. The company previously guided for flat to a 5% decline in annual per-share earnings. When a publicly traded company withdraws guidance, it's usually because things are worse than they're willing to admit publicly. It means they can't predict their own financial future with enough confidence to tell investors what to expect. Harley-Davidson's international dealer inventories were down 28% in Q2 2025, yet the company still faces $13 million in tariff costs for Q2 alone. They're caught in a perfect storm of supply chain issues, regulatory challenges, and declining consumer demand. They're cutting inventory to reduce costs, but they're still getting hammered by tariffs on the inventory they do have. Morgan Stanley adjusted its financial forecast for Harley-Davidson downward by 8% for 2025 and 13% for 2026, citing demand and margin pressures. When one of the most respected financial institutions on Wall Street is cutting forecasts by double digits, that's a serious red flag. Wall Street is losing faith in Harley's ability to navigate these troubled waters. Harley owners, Are you losing faith in the motor company? Be honest in the comments because I think a lot of you are feeling the same way. But what's causing this industry-wide collapse? What are the forces that are bringing down dealerships and manufacturers alike? Let me show you the 5 catastrophic forces creating the perfect storm for 2026. The 5 catastrophic forces. Understanding these forces is crucial if you want to protect yourself, or better yet, capitalize on the opportunities this crash will create. Because while these forces are destroying businesses, they're creating unprecedented opportunities for informed buyers. Force number 1, the tariff tsunami. The first force is what I call the tariff tsunami, and it's hitting the industry like a freight train. Imported motorcycles are now hit with a 25% tariff, a massive increase from the previous 2.5%. That's a 10 times increase overnight. For a $15,000 motorcycle, that's an additional $3,750 tacked onto the price tag. That's not a small increase. That's enough to push many buyers out of the market entirely. But it gets worse. Foreign-produced steel and aluminum contained within motorcycles is now subject to a 50% tax. The tariff applies to motorcycles between 250 cubic centimeters and 500 cubic centimeters, those exceeding 800 cubic centimeters, and electric models. Interestingly, some displacement categories under 50 cubic centimeters, 50 cubic centimeters to 250 cubic centimeters, and 500 cubic centimeters to 800 cubic centimeters are inexplicably excluded. This creates bizarre market distortions where a 499 cubic centimeter bike might cost thousands more than a 501 cubic centimeter model of the same brand. Harley-Davidson expects tariffs to cost between $130 million and $175 million in 2025 alone. The company revised this estimate upward, indicating tariff impacts could reach the full $175 million for the year. That's money that won't go into research and development, new model development, or dealer support. That's pure cost with no benefit. A $10,000 motorcycle could jump to $13,000, or even $14,000 at retail due to the new 50% tariff on foreign-produced steel components. For manufacturers, motorcycles with foreign-produced steel components are subject to steep 50% tariffs on those materials alone. Even American-made bikes often contain significant percentages of imported materials. Retaliatory tariffs from foreign markets on U.S. products range from 6% to 56%, making American bikes prohibitively expensive for European riders. The European Union, once a strong market for Harley-Davidson and Indian, has imposed punitive tariffs that make American bikes cost as much as luxury cars in some markets. Even U.S.-built motorcycles aren't immune, as many rely on imported steel and aluminum for production. Harley-Davidson stated that import of parts and foreign-made components is projected to cost the company as much as $175 million in 2025. No manufacturer is completely insulated from these tariff impacts. The global supply chain means everyone gets hit. 2026 model motorcycles will see new updated tariff pricing starting in June 2025. Most 2025 model year motorcycles have already been imported and won't see price increases, but 2026 models ordered after June 2025 may see significant increases. This creates a brief window of opportunity. Here's your opportunity. If you're buying, do it before June 2025 to avoid the tariff price jump. Drop buying now if you're taking advantage of this window. The tariffs also hit the aftermarket hard. Tariffs on regular replacement items like brakes and gaskets have driven up the cost of maintenance by 15% to 30% in the past year alone. Simple maintenance items like oil filters and brake pads have seen price increases that add up over the life of the bike. Motorcycle prices increased throughout numerous models from BMW, KTM, Triumph, Honda, Yamaha, and Royal Enfield. This has driven consumers increasingly toward the used market as an alternative, at least initially. But as we'll see with force number 4, even that's changing. Force number 2, the interest rate trap. The second catastrophic force is what I call the interest rate trap, and it's squeezing buyers from a completely different direction. The Federal Reserve reduced its policy interest rate by 0.25% to a range of 4.00% to 4.25% in September 2025. While this sounds like good news, it's too little. Too late for many dealers and manufacturers who've been struggling with high borrowing costs for years. Interest rate markets currently price in a sub-3% policy rate by the end of 2026, more cuts than updated Fed projections. However, Fed projections show members anticipate only one additional cut in 2026. This disconnect between market expectations and Fed intentions creates uncertainty that further dampens consumer confidence. Even if the Fed starts lowering rates, there's no guarantee motorcycle loan rates will immediately follow suit. Auto loan rates tend to be what economists call sticky on the downside, meaning they're slow to decrease even when the Fed cuts rates. Banks and finance companies are protecting their margins, especially in the high-risk motorcycle lending segment. Current motorcycle loan rates for 2024 to 2026 models range from 7.49% to 18.24% APR for terms up to 72 months. For longer 73 to 84-month terms, rates increase to 7.74% to 18.49%. Compare these rates to the 0.9% or 1.9% financing commonly available before 2022, and you can see why sales have plummeted. Drop a comment if high interest rates are the main reason you're not buying a new bike right now, because I think this is affecting more people than the industry wants to admit. This means that even with projected Fed cuts through 2026, motorcycle financing will likely remain expensive compared to the pre-2022 era, continuing to suppress demand. A buyer who could afford a $20,000 motorcycle at 1.9% financing might only qualify for a $12,000 to $15,000 bike at current rates, forcing them to consider used options or defer purchases entirely. The interest rate environment has particularly impacted younger buyers, who typically have less cash for down payments and rely more heavily on financing. This demographic shift has accelerated the aging of the motorcycle customer base, with the average new bike buyer now over 50 years old. That's a huge problem for the long-term health of the industry. Force number 3, the floor plan financing crisis. The third force is the floor plan financing crisis, and this is what's really killing dealerships right now. Floor plan finance fraud is on the rise across the automotive and powersports industry. As fraudulent activity picks up, floor plan financiers are seeing an uptick in dealers disappearing. Some desperate dealers have resorted to selling bikes out the back door without paying off floor plan loans, creating a crisis of confidence among lenders. Many dealerships are paying $25,000 to $40,000 per month, just in interest on stock sitting in showrooms. Think about that. $25,000 to $40,000 per month, just in interest, not principal, just interest. For dealerships already struggling with declining sales, this creates an unsustainable financial burden. Every day a bike sits unsold, it costs the dealer money. Let me give you a real-world example of how bad this has gotten. Peter Stevens Motorcycles, one of Australia's largest motorcycle retailers, entered voluntary administration in May 2025, with total debts exceeding $65 million. The business had an annual turnover of around $250 million and operated 15 locations. This wasn't some small, struggling shop. This was a major player in the Australian market. Peter Stevens owed $26.5 million in retail floor plan financing alone. The company also owed Westpac $7.6 million as a secured creditor, the Australian Taxation Office $4.5 million, and had lease obligations of $15.1 million. The collapse impacts approximately 400 employees and numerous customers who had bikes in for service or on order. This collapse sent shockwaves through the global motorcycle industry and is seen as a canary in the coal mine for what's coming to North America. If it can happen to one of Australia's largest dealers, it can happen anywhere. Floor plan lenders are responding to these risks by tightening credit standards and raising rates. Many dealers who previously qualified for prime floor plan rates are now being pushed into higher cost categories with interest rates 3% to 5% higher. Others are having their credit lines reduced or eliminated entirely, forcing them to reduce inventory or close. The floor plan crisis creates a vicious cycle that's almost impossible to escape. As sales slow, bikes sit longer on showroom floors, increasing interest costs. Higher interest costs reduce profitability, making it harder for dealers to offer competitive prices. Higher prices further reduce sales, and the cycle continues downward. It's a death spiral, and once you're in it, it's almost impossible to get out. Force number 4, the used motorcycle market collapse. The fourth catastrophic force is the used motorcycle market collapse, and this is affecting both buyers and sellers in dramatic ways. Used motorcycle prices declined across nearly all categories in July 2025. Sport bikes dropped 11%, metric cruisers fell 6%, dual sport bikes declined 4%, motocross bikes dropped 2%, but domestic cruisers showed the biggest monthly drop of 13% in July compared to the previous 3 months. Bikes that commanded over $12,000 just 2 years ago are now struggling to fetch $7,500 if they sell at all. Private sellers are feeling the pain, with many forced to accept offers 30% to 40% below what they expected based on previous market conditions. Let me show you specific models so you can see how dramatic this is. The Indian Scout Bobber crashed from $13,000 average retail in 2024 to $8,000 in 2024. 2025, that's a 34% depreciation in just 1 year. If you bought a Scout Bobber new in 2024 for $13,000, you've lost $5,000 in value in 12 months. The Yamaha MT-10 dropped from $14,000 in 2024 to around $10,000 in 2025, a 30% decline in just 1 year. The Royal Enfield Continental GT 650 dropped from $6,000 to as low as $3,600 in 2025, a 40% drop. If you've lost money selling a bike in the last 18 months, drop your story below. You're not alone. Let's document this crash together because I think the industry needs to see how this is affecting real riders. After the pandemic drove prices up artificially, motorcycles are now experiencing accelerated depreciation as the market corrects. Typical motorcycles lose about 20% of their value per year under normal conditions, but we're seeing double that rate in the current market. Some models are depreciating faster than new cars, which is almost unheard of. The oversupply of new motorcycles flooding dealership lots has created a buyer's paradise but a seller's nightmare. Combined with rising interest rates and cautious consumer spending, used motorcycle values continue declining. Auction houses report record numbers of bikes going unsold, even at reserve prices 40% below book value. This collapse in used values has a direct impact on new bike sales as well. Many potential new bike buyers are underwater on their current motorcycles, owing more than the bikes are worth. Without equity to roll into a new purchase, they're stuck with their current rides. This creates another vicious cycle. People can't trade up, so new bike sales suffer. So manufacturers cut production. So dealers have less inventory, so the whole system contracts. Force number 5, the insurance cost explosion. The fifth and final catastrophic force is the insurance cost explosion. And this is the hidden cost that's pricing many riders out of the market entirely. U.S. motorcycle insurance premiums rose by 4.2% in 2025, driven by inflation in repair and parts costs. This comes on top of similar increases in 2023 and 2024, creating a cumulative effect that's pricing many riders out of the market. When you stack 4% to 5% increases year after year, it adds up fast. Urban riders in 2025 pay 22% to 27% higher premiums than rural riders. Sport motorcycle insurance rates are 19% higher in 2025 than standard bikes. These disparities are widening as insurers use increasingly sophisticated data analytics to segment risk pools. New riders with less than 1 year of experience pay on average 27% more in premiums than those with over 5 years of riding history. This creates another barrier to entry for potential new motorcyclists, further shrinking the pool of buyers. When you're a new rider looking at a $10,000 bike with a $2,500 annual insurance premium, that's a tough pill to swallow. Motorcycle insurance premiums increased by an average of 5% in 2023, largely due to inflationary pressures, higher repair costs, and increased claim frequency. Some popular models have seen even steeper increases, with supersport bikes experiencing premium hikes of 15% to 20% in certain markets. Motorcycle theft has surged, prompting 15% more riders to add comprehensive coverage. This adds hundreds of dollars to annual insurance costs, particularly in urban areas where theft rates are highest. In some cities, comprehensive coverage can double your premium. Overall auto insurance, which includes motorcycles, saw approximately 30% increases for 2025 renewals across many providers. Some riders report receiving renewal notices with 50% to 60% increases, forcing them to shop around or reduce coverage. When your insurance bill jumps from $1,200 to $1,800 overnight, that's a real financial hit. Drop a comment with your insurance increase percentage. Let's see who got hit the hardest because I'm tracking this data. The insurance situation is particularly dire for riders under 25 and over 65, who face the highest rates and most significant increases. Many older riders are choosing to hang up their helmets rather than pay premiums that can exceed $2,000 annually for full coverage. That's another demographic problem for the industry, losing experienced riders who can actually afford to buy new bikes. Let me recap the 5 forces destroying the motorcycle industry. Force number 1 is the tariff tsunami, with 25% to 50% tariffs on imports. Force number 2 is the interest rate trap, with rates ranging from 7.49% to 18.24% APR. Force number 3 is the floor plan crisis, with dealers paying $25,000 to $40,000 per month in interest. Force number 4 is the used market collapse, with depreciation ranging from 11% to 34% in a single year. And force number 5 is the insurance explosion, with increases around 30% across the board. And these 5 catastrophic forces are creating the perfect storm for 2026. But what does this mean for you as a rider? How can you turn this crisis into opportunity? The opportunity. Every market crash creates both victims and victors. The question is, which one will you be? Drop victim or victor in the comments. Which side are you on? The 2026 motorcycle market crash is projected to be worse than 2025 due to escalating tariff costs of 25% to 50%, interest rates remaining elevated through at least mid-2026. The dealership network collapsing with 180 more closures projected by year-end. Major manufacturers pulling back with Polaris exiting and KTM restructuring and Harley cutting production. Used values continuing to crash as repossessions flood the market. Insurance costs rising 4% to 5% annually. The floor plan financing crisis making it impossible for remaining dealers to stock inventory, demographic shifts as baby boomers age out, and younger buyers avoid motorcycles, economic projections showing weakening GDP growth into 2026, and manufacturer consolidation with the direct sales model eliminating traditional dealerships. But here's where the opportunity comes in, and this is where smart buyers can capitalize on what's happening. The used motorcycle market is becoming a buyer's paradise. Bikes that commanded over $12,000 just 2 years ago are now struggling to fetch $7,500. This trend will accelerate through 2026 as more bikes hit the market and fewer buyers are competing for them. Let me show you the real numbers on specific models. The Indian Scout Bobber went from $13,000 in 2024 to $8,000 in 2024, 2025. That's $5,000 in savings if you're buying used instead of new. The Yamaha MT-10 dropped from $14,000 to $10,000. That's $4,000 in savings. The Royal Enfield Continental GT 650 went from $6,000 to $3,600. That's $2,400 in savings on a bike that's already affordable. What bike are you hunting for? Drop the model below and I'll tell you if you should wait or buy now, because timing matters in this market. With floor plan interest of $25,000 to $40,000 per month eating them alive, dealers are more willing than ever to make deals just to move inventory and reduce their interest burden. Remember those numbers I showed you earlier? Dealers need to sell 350 to 400 units to break even, but they're only selling 187. That gap represents your negotiating leverage. That means you can walk in with cash or pre-approved financing and have real negotiating power. Dealers can't afford to let serious buyers walk away when they're that far below break-even. Every sale helps reduce their floor plan burden, even if they're making minimal profit or even taking a small loss. Harley-Davidson is already offering 0.99% financing on select models, and that's just the beginning. By mid-2026, expect even more aggressive financing offers, cash rebates, and value-added packages as manufacturers fight for every sale. When manufacturers are desperate, they subsidize interest rates to move inventory. That's money coming out of their pocket and going into yours. As dealerships close, their parts and accessories inventory gets liquidated at significant discounts. Smart buyers can stock up on consumables like oil filters, brake pads, and tires at prices substantially below retail. If you know your local dealer is closing, that's the time to buy everything you'll need for the next few years. The high-end segment is getting hit hardest because it relies on discretionary spending, which is the first thing consumers cut in uncertain economic times. Bikes like the BMW R1250GS, Ducati Panigale, and Harley Road Glide, models that rarely see discounts, are now available with substantial markdowns from MSRP. These are bikes that traditionally sell at or above MSRP, and now dealers are discounting them just to move metal. If you're waiting for prices to drop even further, drop waiting below. If you're buying now, drop buying now. I want to see where people's heads are at. But to capitalize on this opportunity, you need to be strategic. You can't just walk into a dealership and expect to get a great deal. You need a plan. The playbook. Here's your 10-step buyer's playbook to turn this crisis into opportunity. Follow these steps and you'll be in a position to get the best possible deal. Step 1 is to get your financing in order before you even start shopping. Current motorcycle loan rates range from 7.49% to 18.24% APR, which is a huge range. Credit unions typically offer rates 2% to 3% lower than dealer financing, unless the manufacturer is subsidizing a special promotional rate. Get pre-approved for a loan amount higher than you plan to spend. This gives you negotiating power and the ability to act quickly when you find the right bike. Step 2 is to target dealerships with high inventory levels. The more units a dealer has sitting on the floor, the more they're paying in floor plan interest. Remember, that's $25,000 to $40,000 per month, and the more desperate they'll be to move them. Pay attention to dealerships with the same model in multiple colors or model years. That's a clear sign of overstock and financial pressure. Step 3 is to shop at strategic times. Shop at the end of the month, quarter, or fiscal year. The last week of March, June, September, and December are optimal times, with December being the absolute best. Dealers have sales targets they need to hit, and the pressure intensifies as these deadlines approach. Many dealers receive bonuses from manufacturers based on quarterly sales volumes. If they're just 1 or 2 units short of the next bonus tier, they might sell a bike at a loss just to hit that target. Step 4 is to be prepared to walk away. This is crucial. With dealers selling only 187 units when they need 350 to 400 to break even, they can't afford to let serious buyers walk away. If a dealer won't meet your price, simply thank them for their time and leave your contact information. 9 times out of 10, they'll call you within 48 hours with a better offer. Remember, every day that bike sits on their floor costs them money in floor plan interest. Step 5 is to calculate the total cost of ownership, not just the purchase price. Factor in insurance increases. Urban riders pay 22% to 27% more than rural riders. Sport bikes cost 19% more to insure than standard bikes. New riders pay 27% more than experienced riders. Get insurance quotes before you buy because some models cost significantly more to insure than others, even within the same category. Step 6 is to look for closing dealerships. With 47 dealerships closed in the last 30 days and 180 more projected by December 2025, inventory liquidation sales are becoming more common. Follow local powersports business news and watch for signs like reduced operating hours, consolidated service departments, or unusually large sale events. When a dealer knows they're closing, their only goal is to convert inventory to cash as quickly as possible. If you know of a dealership closing near you, drop the location below to help other viewers find these opportunities. Step 7 is to consider certified pre-owned programs. Manufacturers are pushing CPO programs harder than ever to move trade-ins and lease returns. These bikes often come with factory warranties and have been thoroughly inspected. The sweet spot is finding 2 to 3-year-old CPO bikes, which have already taken the steepest depreciation hit but still have plenty of life left. With used values dropping 11% for sport bikes, 6% for metric cruisers, and 13% for domestic cruisers in just 1 month, CPO bikes represent exceptional value. Step 8 is to time your purchase strategically around the tariff situation. Most 2025 model year motorcycles have already been imported and won't see tariff-related price increases. However, 2026 model motorcycles will see new updated tariff pricing starting in June 2025. This creates a window of opportunity to purchase 2025 models at pre-tariff prices and potentially save thousands of dollars. If you're planning to buy anyway, doing it before June 2025 could save you serious money. Step 9 is to focus on models with the steepest depreciation because that's where the value is. Target models like the Indian Scout Bobber, which is down 34%. The Yamaha MT-10, which is down 30%. The Royal Enfield Continental GT 650, which is down 40%. Domestic cruisers, which dropped 13% in just 1 month. These represent maximum value opportunities where you're getting the most bike for your money. Step 10 is to monitor manufacturer health before you buy. With KTM facing potential extinction, Polaris exiting the motorcycle business entirely, and Harley-Davidson withdrawing financial guidance, the manufacturer you choose matters more than ever. Consider parts availability, warranty support, and long-term viability. A great deal on a bike from a failing manufacturer might not be such a great deal if parts become unavailable or warranty claims go unsupported. Which step are you implementing first? Drop the number below, 1 through 10, because I want to know what you're focusing on. By following this playbook, you can turn the 2026 motorcycle market crash into an opportunity to acquire a quality motorcycle at prices we may never see again. This is a once-in-a-generation opportunity for informed buyers who understand what's happening and know how to capitalize on it. The 2026 motorcycle market crash isn't just coming, it's already here. The evidence is overwhelming and undeniable. 47 dealerships closed in the last 30 days, 180 more closing by year-end. KTM drowning in $2.8 billion of debt. Polaris exiting the motorcycle business entirely after 28 years. Used values down 11% to 34% depending on the category. Tariffs hitting 25% to 50% on imports. Insurance premiums up 30% across the board. But unlike housing or stock market crashes that wipe out wealth, this crash benefits informed consumers who know how to navigate it. The next 12 to 18 months will present a once-in-a-generation buying opportunity for motorcyclists. Those who understand the 5 catastrophic forces, the tariff tsunami, the interest rate trap, the floor plan crisis, the used market collapse, and the insurance explosion will acquire their dream bikes at historic discounts while others are paralyzed by fear. Before you go, I need you to do 2 things for me. First, share this video with any rider who needs to see what's coming. They'll thank you later when they're riding their dream bike at a fraction of what it would have cost a year ago. Second, hit subscribe because I'm tracking this crash in real time with weekly updates on the best deals and strategies as they emerge. Are you buying into 2025 or waiting for 2026? Drop your answer below because I'm curious to see how people are thinking about timing. Remember, in every market crash, there are victims and victors. With the information I've shared today, you're now equipped to be among the victors. You understand what's happening, why it's happening, and how to capitalize on it. Ride safe, and I'll see you in the next video.